All right. You can hear me good?
Yeah.
Awesome. I've been thinking about this interview with you
Oh, really?
for a while. So I don't have to repeat myself. How in the heck did you, first of all, let's start from the beginning. Steve and I met when you were a loan originator and I was an account executive.
Right. I worked for Can Do Dan Drew, and you were our rep for,
God bless his
uh,
soul. Not really in your perspective, but we'll save that for another time.
interesting times.
So we met each other, and then you had been doing that a while. When did you start originating loans? It was before me, I think.
I started in '98.
Okay, I
Yeah,
started in '98.
I went to
Same
go,
time.
originally went to go work for a friend of mine's son who got into it, got in mortgage, became a mortgage broker, and he really didn't know what he was doing. He had no experience in lending. I didn't either. Um, after about a After about 6 months not being able to get loans funded because they didn't know him and his girlfriend didn't know what they were doing. Um, I I went to another broker who actually did. Um, and then I went in the next 4 5 years. I went to various different brokers. As net branch managers, we all jumped around because everybody was telling us, offering us better deals if we produce volume.
Yeah.
So, one guy, Bob at lender or at correspondent lender A would say, "Hey, come work for me," and then correspondent lender B would say, "Hey, I like your volume. Come work for me. I'll pay you more money."
Yeah. Back in the
So,
day.
so
And,
2007, and I worked for a handful of guys down in Detroit. No, actually, no. I stayed in it, till 2007, and then what I did was when the market started tanking in Michigan, and I knew that the end was coming. I jumped on board and did commercial lending.
okay.
Well, what happened was when I started doing commercial lending, I started having people call me from Michigan who I had helped try, who had, various people I had helped. And one woman up in Charlevoix, who basically told me, "Hey, I need help on this. I don't know what to do." So I helped her save her house, and then she told 5 people, who told 5 people, who told 5 people, and then eventually it became so. I was getting so many phone calls by middle of 2008 that what I did was I formed a company around it,
Yeah.
and that's how MFI Miami was born.
And I remember those times because there was a lot of people scrambling and they just didn't know what to do at all.
Right, and nobody did, and and that was the main problem across the board. Nobody knew what to do, and unless you had a background in mortgage lending and knew something about mortgage compliance, it, there was nobody else that are out there doing it. Because there wasn't, everybody had been laid off. Everybody was scrambling, trying in the industry, brokers, loan officers, everybody was scrambling looking for a job. And so I got lucky when I formed MFI Miami because there was a lot of discrimination against mortgage lenders and mortgage brokers at that time. I don't know if you ever experienced it, but I knew guys down here that would go look for jobs and sales jobs, and they said former mortgage brokers and former loan officers need not apply.
They blame the entire crash on the broker. channel.
Yeah, and that
Was
ended
not
up,
really the truth, but
right, and that ended up,
everybody had a hand in that.
right, and that was, it turned out that that wasn't the case. It ended up being the guys on Wall Street who were, playing, who were playing, Russian roulette with this stuff.
And that's what you found out. And that's what made you unique at that time, right? When everybody else was looking at it from a more of a two-dimensional angle.
Mm-hmm. Right, and then what we did was, one of the first things we did was at MFI Miami, I got lucky because there was nobody doing what I was doing.
In without getting too belabored with it, what was give us a snapshot of what that was. Was
Nobody
it
was,
dealing in
nobody,
mortgage-backed securities, right?
you're right. Nobody was in the industry was stepping forward to help consumers, because a lot of these guys that were laid off mortgage brokers and loan officers, they weren't trained like I was. Because what happened was in the late 90s, when you were a loan officer, you were trained the old school loan officer way from the 1950s, 60s, 70s, and 80s, where you learned every aspect of a loan. So you learned what underwriting was. You learned what how to read appraisals.
How to calculate a truth in lending statement.
Right. You learned on what every sheet of a loan application or a 1003 meant. You were taught what gets reviewed by the Department of Justice, what goes to HUD, and what every little aspect of that loan application means and why it's there. Okay.
And that obviously benefited you later because you knew what was fraud and what should have came through and what should have not come through, correct?
Correct. A lot of these guys, what happened was after 9/11, a lot of these guys, like Dan Gilbert, guy owns Quicken Loans, well, Rocket Mortgage now. But what they did was they turned it into an assembly line process. So the guy who was originating the loan, I should say person, originating the loan, didn't know anything. His job was to get the people to sign on the bottom line. He didn't, he wasn't taught what the underwriter is going to do or what the title work is going to say or what it all that, what the whole, the mechanics of that engine that make up a mortgage loan. Okay. What's going to happen on the secondary market, and so a lot of people, a lot of lenders, correspondent lenders, got bigger lenders like Option One, First Franklin. They did the same thing. They created a assembly line process, and they did it intentionally that way so they could have plausible deniability if something went wrong.
What do you mean by that specifically?
That way they couldn't, if let's say there was fraud committed by the lender in the file, they couldn't pin it on one individual person. Okay. Yeah, they could say, oh, well, oh, that was Bob in appraisals. And then they go talk to Bob. Bob goes, I didn't touch this file. It must have been Natalie in underwriting. They go talk to Natalie in underwriting. Natalie doesn't know anything about it either. So what they would do is create this atmosphere of confusion if regulators came to the door, knocked on the door. And so what happened was you ended up, and that's how a lot of the fraud got committed, because nobody knew what was going on, and it was all chaos by design.
So fast forward to now, how different is what you have to do than it was then? And a lot of your work was what in
Well,
09, 10, 11, you were doing a lot of those.
Right. A lot of it had to do with, back then there were arguments that you could make like in regards to securitization of the loan. You could bring those arguments up and say, look, it's, it's, point A to point C to point D to point E to point F. But if point D, it was skipped over, then you could make a claim that that the lender didn't have a legal standing, or there was an issue with that, and they'd have to kick it out. Well, what happened was courts came back and said, in most states now, that you can't argue securitization because the homeowner was not part of that end of the transaction. So they are not an insured party because they still own the house, even though and they're still in possession of the house. So therefore they are not an insured party. The insured party would be the bondholders, and they are the proper one. They are the ones who have to bring the action against the servicer and the trustee, or whoever it may be. Now
That's how all that shook down.
yeah, like here in Florida, we have a legal precedence called the Castile ruling, which means that you can't argue for that. Like I just described, the homeowner was not part of that part of the transaction, so therefore, you can't. The homeowner has no standing to bring that argument. In Michigan, you guys have Livonia v. Farmington, which says that pretty much an identical claim. You can't you can't bring that claim because you're not an injured party. You weren't part of that part of the transaction, so therefore it's not violation of Michigan law. So now what's happened with foreclosure defense is that it has basically boiled down to two main key elements: legal standing and validation of the debt. You can't if you can prove the debt but can't prove that you don't have standing. You can't foreclose. You can prove that even if you prove you have standing but you can't validate the dollar amount of the debt, you can't foreclose. So you have to be able to prove both. And so what's happened is you still have arguments you can make for lack of standing, namely in if the note is not endorsed, they can't find the wet ink copy of the note. Like in states like New York and Florida, you have to have the lender's lawyer has to be in possession of the original wet ink copy of the note in order to initiate a foreclosure action. If they don't have it, they can't foreclose. And probably about 70% of the time they don't have it. But the fallback that they use is, well, we can establish ownership because of the mortgage assignments. We show that it went from the originating lender, who might be Wells Fargo, to the asset-backed security, which is Wells Fargo asset-backed security 2007 AABB. Okay. So what happens is, if they can establish some type of chain of title in regards to the mortgage and the mortgage assignment, most of the time the judge is going to let it go through. Okay. It has to be something totally egregious where the judge won't let it go through. Namely, let's say, for example, they have a missing mortgage assignment. They don't have a wet ink copy note, and they have a missing mortgage assignment. Now they have now you can make a claim that they lack legal standing to initiate the foreclosure. Okay. So there's a number of ways that you can still attack it. But
would you say you're just buying people some time to get a mod or whatever?
Yes and no.
Okay.
It depends on this. Every one of these
Is different.
is different. You know this from being a loan originator.
Same thing with that.
Needs are different, and that's why you have different programs for different people. Okay. Yeah. And so depending on how the loan was originated and everything else. And that's where all that comes into play. And so what happens is sometimes you can't, sometimes you can't. Now, if somebody has one of those old pick a pay option arm loans from 20 years ago, yeah, where the thing has gone from Washington Mutual to the FDIC to Chase to SBS or SLS, chances are they don't have the note. The note got lost during all these transfers, and they can't validate the dollar amount of the debt because they can't provide a complete transaction history. If they can't complete, my argument has always been if they can't supply a complete transaction history, how can they validate the dollar amount of the debt?
Gotcha. So I'm a homeowner. I'm in trouble.
Mm-hmm.
From my observation, it's a great idea to reach out and to be proactive as soon as possible. From what I'm feeling, time is of the essence with these things. From watching you work, can you kind of elaborate on that? Because a lot of the homeowners feel like, oh, I got time, or they never really have a lot of time.
Well, it depends. When I tell people all the time, come to me as soon as you know you're in trouble. Okay. Because what happened, because generally I can hook them up with someone who does loan modifications that can get this resolved right away, or I can find out what the lender wants, and to make this, to resolve this whole issue, so it doesn't go to foreclosure. Okay. So
just having issues, call Steve
yeah,
immediately.
come immediately, because there's things that we can do. The earlier you get on this, there's more options. Now, if you wait, till the day of the sheriff's sale, like in Michigan, those options are going to start going to shrink, because where you may have had 10 options at the very beginning, now you're only limited to maybe 3 or 4. A lot of people, and we're seeing more and more of this, people waiting until the sheriff is like a day away from knocking on the door, and post foreclosure, and expecting me or a lawyer to be able to do something. Okay. There's nothing you can do at that point. It's you've wasted a whole lot of time burying your head in the sand and everything else. You don't want to do that.
Gotcha. Yeah, I've seen you frustrated with some of the clients last minute. So
I right now. I have one right now, and I'm going to save it, but more than likely we're going to the lawyer and I are going to save it. But he kept dragging his feet. We had to keep having the talk with him. Dude, you need to get your act together. You need to get your act together. You need to get your act together. You got 2 kids, a wife and 2 kids, and you need to get this. You need to do it. Usually, I tend to avoid those people, but sometimes it's when you got kids and a wife involved, and they got money to pay me, then I'll try. I'll do what I can. 9 times out of 10 that we can't save it. If it's like in Michigan, you guys have that 6-month redemption period after the sheriff's sale. Generally, lately, a lot of lenders are willing to negotiate during that 6-month redemption period. Okay, but you got to give them a reason to negotiate with you. You have to have a legitimate reason why you went to foreclosure. And in certain cases right now, you can blame it on the pandemic, on the COVID pandemic, because those were that's a legitimate excuse. And what we're seeing with the pandemic right now is these lenders coming back, put people in forbearance agreements who are now saying, hey, that $40,000 you're in arrears because you haven't made a mortgage payment 2 years, we want it now. Well, they can't do that under the CARES Act. Under the CARES Act, they have to put that money that's owed onto the back of the loan and recalculate everything in a loan mod.
I was just gonna comment, you're 100% with the people I referred you to. You've gotten them mod or gotten delayed or whatever. And you were extremely economical in the whole equation. You don't have to tell people on this how much you charge because it's going to be different with each customer.
Right, and it depends on
the
value of the house too. It depends on the value of the home and what I have to do.
What do you have to do?
Right, yeah. And they need, doing a basic review of the file and writing up a report. That's going to be different than doing expert witness testimony, where I have to go on the stand, testify in front of the judge, and all that. That's something totally different. That's definitely going to be more money. But 9 times out of 10, I can usually get these results because everyone in the lending industry knows who I am. I can usually get these resolved relatively quickly because of the fact that they do not want to put me on the stand.
I was just going to say, instead of trying to perform your own brain surgery, let Steve work it out with the bank.
Yeah, I would, but the problem is a lot of people think that they can do this themselves, and they take the attitude that, oh, I worked on the, I worked, I built Cadillacs at the Lansing assembly plant. I can figure this out, and it's not like, working on the assembly line or being a mechanical engineer or being an airline pilot. It is a totally different realm of what you're dealing with. Matter of fact, for probably about a 5-year period, I was helping probably about 15 to 20 airline pilots. These guys know how to take a 747 out of a nosedive, but they can't, they don't know how to negotiate with a lender.
And you guys are great, and you're really professional about it. You don't even get nasty until you have to. You use more honey. I see, and you get stuff done that way too, right?
Right. Yeah. And the cool thing is that because everybody in the lending knows who I am, that I can, and I have the blog on the website, so everybody in lending knows who I am. So if their lenders call, JP Morgan Chase and, in Manhattan, they're going to say, let's settle because we don't want, and I'm willing to settle with these guys. Unlike a lot of my competitors, well, a lot of them are gone, but a lot of my competitors would not negotiate. They went all in, which was stupid. And 9 times out of 10, the client ended up losing the house because they would not sit down and negotiate a mutually beneficial deal that was good, kept the homeowner in the home, paid off the debt or reduced portion of the debt, and kept the lender happy because now they didn't have to foreclose and they didn't have to go through, they didn't have to pay extra legal fees. They didn't have to, and go through the headache of trying to sell the property at a loss and everything else. They're making money from these people. The longer somebody's in their home, if they can keep somebody in the home, contrary to popular belief, if they want to keep the person in the home because that's how they make their money.
They're receiving payments.
Right, because they're receiving payment, they're receiving interest on that debt, and they're making money on the long-term, on the long-term, loan. Contrary to what you heard during the foreclosure crisis, these the lenders didn't want to foreclose. They did it as a last resort. They didn't want to, there was no benefit to go in and foreclose on somebody who's upside down, who may owe, 500,000 on a mortgage on a house that's worth maybe 150 or 250. It made no sense.
So how do people get a hold of you if they're
Well, they can call my toll-free number. They can call me at 888-737-6344, or they can go to the website www.mfi-miami.com and fill out a contact form through that.
awesome? And now, what is the process that they would expect to go through, like out of the gate with you?
With me? Oh, okay. With me, the first thing they would have to do is sign a client agreement, and engage, with an engagement agreement and everything else with an authorization, so I can request documents from whoever their servicer is, and then they'd have to pay me. We'd have to figure out how they're going to pay me, and everything else. In certain cases, I will offer payment plans. As long as there doesn't go over a month, 45 days. Some people I will offer a payment plan to. But then when I do, first thing I do is I send what's known as a QWR, which is a government term for a correspondence. And in that letter, I request documents of the file, from the file. I ask for everything from the original loan application to where the loan is now. So there's probably 87 different documents that I asked for. And those include the original loan application, appraisal work, title work, the endorsed copy of the promissory note, the mortgage and any mortgage assignments attached to it, and most importantly, the complete transaction history. So, because if there's any breaks in that, like we were talking about before, in regards to validation of the debt, that's where that comes into play. Because if there's a 5-year gap of missing payment history, then I can make the argument right out of the gate that, all right, now they have a validation, they can't validate the dollar amount of the debt. Because if there's like a 5-year gap, who's to say that Mrs. Smith, the homeowner, didn't win, $50,000 at Turtle Creek Casino or at MGM Grand in Detroit and paid down the mortgage.
Right on. Sweet. So visit the website, look at, and then you're going to get most of those documents, but they have a lot of it in their closing package too, right?
Correct. But a lot of people, depending on how old the loan is, 9 times out of 10, a lot of people don't keep their mortgage documents. So you have to get them directly from the lender.
Right. And you kind of like that anyway, right? Because you can elicit it a certain way. It's part of your strategy.
Right. And in that way, it gives me an opportunity to feel out the lender and see what they want. See if they, will they do are they willing to do a loan modification? Are they hell bent on doing a foreclosure? And it'll give me the opportunity to feel them out.
Gotcha. You know what you're getting into.
What? I'm sorry, Dave. I didn't hear you.
You know what you're about to get into.
Yeah. Well, what I'll do is the other thing too is that it helps me build a rapport with some of these customer service people. It's like, for example, at SBS, all their all their loan document requests and everything go through their office in Jacksonville, Florida. And they only have probably about 10 people that work in there. So after a while, you start building a rapport with these 10 women that work there, because you're always calling over there. So you're getting one of the 10.
Makes sense.
And, and so you build a rapport with them, you're friendly with them and everything else. And, they get you what you want. Because these documents, by law, the mortgage servicer has to give the homeowner access to these documents.
So you got a lot of experience in this. You have more experience than I know of anybody, that even more so than even attorneys, because you're in the trenches. So I can't refer you enough to anybody that's having a problem too, for sure. I've seen it in action. And like I said, you've been 100% for my people, 100%. Even that little lady that had problems with her trailer payment, or it was like $112 a month, and you got it all sorted out for her. So
yeah.
You do a lot of different things.
Favorite, well, there were a couple people that I had, that were my favorites. I had a retired Green Beret that lived up in northern Michigan, with a blind autistic son. JP Morgan Chase they were jerking him around, and Trot Law was jerking him around. We got that resolved pretty quick because I got on the phone with Chase, and I kind of told him, I said, look, I said, you're jerking around a former Green Beret. Do you know what, do you truly understand what could go wrong here? And if you don't, go watch Rambo first. or go look up Randy Weaver. And so they ended up JP Morgan Chase ended up firing David Trott from Trott Law. They fired Trott Law, and they flew an executive from a lawyer from Chase, a senior VP in their legal department, from New York City to Traverse City to negotiate the deal, to keep this guy in his house. And they tore up the guy's mortgage. They tore up the guy's mortgage. So you don't owe us any more money. The client said, no, I owe you money. I will pay it. The honorable Green Beret that he is said, I will pay you, but I want my original payment. And so that he went back to his original payment. Chase said, tell you what, for your troubles and everything that went down, we're going to lower the interest rate to 2%. We agreed to that. He said, fine. So he ended up getting a whole new deal, 30-year deal, with a 2% interest rate.
Amazing. That's a good story. That's an awesome story.
Yeah. And there was the woman that we had, the woman I had in Kalkaska. I can't mention her name because I'm under an NDA, but we got a lender, and I can't say the lender either, but we got the lender to do an 80% principal write down on the mortgage.
And to the layman, that means money off the balance, 80%
right,
of the balance off.
Yeah.
Done.
Down is, so let's say, for example, you owe 250 on your mortgage, or 200, let's use 200, it's easier number. Your payment is now $40,000.
Exactly.
And so in her case, it went from 250 down to like $50,000 or something. I don't remember the exact number, but we were able to press that pretty hard with the lender. And it was.
I'm running out of time here.
Fine.
What one more time, how can people get a hold of you? The 800 number one more time?
Yeah, you can go to www.mfi-miami.com,
Okay.
or you can call me at 888-737-6344.
Awesome. And I got one more question. What was your favorite part of this interview?
getting to talk to you. I haven't talked to you, I haven't like seen your mug in like, I don't know, 10 years.
Stephen, great.
So I got to sit and talk to you. I haven't talked to you in a long time.
Here's my great.
And it's kind of cool talking to, and it's kind of fun talking to another mortgage guy, who
Understands it.
eats the stuff for breakfast, lunch, and dinner.
Exactly. I'll call you after we're done with the Zoom.
All right, no problem.
All right, brother. Great,
All right.
great interview, dude. Thank you for your time.
Oh, no problem. Thanks for having me, Dave.
Oh yeah, brother. Talk to you in a bit.
Okay, bye-bye.
Bye.